Welcome back to the channel. A lot to unpack this week, a lot to talk about, especially with all these changes, fears amongst first-time home buyers on the opportunities that lie ahead, especially when it comes to purchasing a home now in some of these hotter markets with all these changes, that 30-year amortization, the increased purchasing power up to 1.5. Want to take an opportunity to go through some of the conversations that we're having at great length with a lot of our clients that are reaching out to have this chat about how these changes are going to impact them, what opportunities lie ahead, and what things they should really be considering. So we welcome you back to the channel. It is Friday, Finance Fridays. I'm your host, Anthony with In Touch Mortgage Solutions. And if you have not subscribed, we invite you to go ahead and do so. Hit that notification bell to stay up to date with all these changes, especially in the mortgage and real estate marketplace right now. And don't forget to leave your thoughts, questions, and comments in the comment section below. But let's get right into this conversation. A lot of clients reaching out to us, a lot of first-time home buyers that are trying to get a firm grip on how these changes could be impacting a lot of buyers that have been planning or anticipating to buy in 2024, 2025. A lot of them were planning to put down 20% on their purchase, especially if those prices were over $1 million. But with the most recent changes coming out on September 16th that will take effect in December on the 15th, ultimately those 30-year amortizations, those insured purchase limits now being increased to 1.5, it does definitely throws a wrench in a lot of these first-time home buyers' plans, because many of them who maybe had saved 20% or working towards saving 20% now have to figure out if they need to buy sooner than later, and ultimately what that risk looks like. What does their mortgage look like as they anticipate? A lot of first-time home buyers, a lot of media coverage on this, talking about the fear of home prices escalating rapidly as these rules take effect, right? And that is really the conversation right now that we're having with a lot of first-time home buyers. And ultimately, we're not telling anyone, including our viewers and our clients here on the channel, to, basically run out there and buy a house today. Get yourself pre-approved, understand your finances, make your budgets, understand what things could look like for you, and ultimately providing you with the tools and the conversations. If you're looking for those tools, ultimately in the description box below is a link to our app, and you can use that app to run those scenarios with the new changes on those 30-year amortizations and what the insurance premiums would look like at 1.5. Now, ultimately, we're asked, these questions, Anthony, to qualify for this price point, you're saying, it's north of $280,000 to qualify for a purchase price of 1.5 million with the minimum of $125,000 down. Who makes this money? I mean, ultimately, we talked a little bit about this. I mean, teachers, police officers, firefighters, a lot of government workers, a lot of, employed people, self-employed people, as a household income, that is a combination. And what a lot of people fail to really ask is not who is making the money, but how many people does it take to be on a deal to qualify? And that is literally the question as we look at the changes in the housing market. I mean, homes are becoming, more and more expensive, obviously, in those hotter markets like the GTA and Vancouver. And the question is really around generational homes. Like, this is literally the question. We're seeing that happen more and more frequently as people are looking to buy a home. We have maybe parents that are going to jump on as co-signers, get on that deal as a guarantor to help the kids qualify. And this is something that's been happening more and more frequently. Ultimately, even parents that are downsizing, they're looking at maybe moving in with their children, to basically simplify their lives, maybe buy one larger home where everyone can live. Really, the question is not who makes the money, because there are people that do definitely make the income supported, or the income they need to support this style or type of mortgage and lifestyle. Whether you agree or disagree with taking a 30-year amortization or buying with less than 20% down, ultimately those are your thoughts, your opinions. And some feel that, hey, stretching myself to buy a home, a larger home at that price point that's going to grow, or at least allows us as a family to grow into that home, as opposed to buying something smaller. I mean, these are options that we're talking with. Clients are coming to us saying, look, and I can do this today, or I can stretch myself a little bit with the help of our parents or a co-signer, a brother or sister, obviously having that conversation about their financial obligations, how that looks like on the deal. But ultimately, there are these conversations happening right now as many Canadians fear that these changes are definitely going to help inflate home prices. I mean, we've talked about it on the channel before, and I just want to basically recap this. I think the important part to understand is it's not a matter for me of if home prices are going to basically expand. It's a matter of when, because realistically, in the environment we're in right now, we have never seen in the last 15 years that I've been around legislation rules that have eased to make home buying more affordable, obviously. And by affordable, I mean allowing individuals to qualify, right? 30-year amortization, extending the amortization bumps up your purchasing power. You're allowed to buy for a little bit more. You're allowed to expand that amortization. Buying for over $1 million allows you to buy that home that you previously may have thought was out of reach. So, I mean, these are really things that you must consider right now. And ultimately, the headwinds are, behind us, I believe, for the most part. Yes, the Canadian economy is definitely not in the best position. There are recessionary fears in the soft landing. Ultimately, as the Canadian economy weakens, the Bank of Canada is loosening, those policy rates. We're getting those cuts. We have one coming up on October 23rd. Arguably, some Canadians are reaching out to me. A lot of clients say, "Hey, do you think it's going to be 50? You think it's going to be 25? What do we think?" And ultimately, the jury's still out on what's going to happen there. It can guarantee, at least at this point, that they're going to cut at least 0.25%. That's pretty much baked into the pie right now. But I mean, ultimately, what's going to happen in December, keeping in mind that Canada's already cut several times ahead of the US, and the fact that Canada is a housing economy and builders aren't building, developers aren't building. They've been on a hiatus for the last 14 to 16 months. So think about the inventory levels in Canada, obviously in the condo space. Definitely a lot of condos, but what about those single family homes? What about those townhomes, those semis, those one car garage homes that many first time home buyers that have a growing family, or even move up buyers that are moving from a smaller property into a larger one, trying to stay within that 1.5 purchase price? Now they're going to have more competition in that space, competing against people that have 20% or more, 20% right on, or even less than 20%, but have those substantial incomes to substantiate the qualification of those mortgages. So once again, you have to understand that when you're looking at this market, you're looking at developers not building. So the amount, the product, the types of homes that Canadians are searching for, we're just not bringing it to the market. And that's going to be one problem, because if a lot of Canadians are looking at those single family homes in these hotter markets, well, there's going to be a lot of competition chasing those limited amount of homes because the builders aren't putting them on the market. And if they do, and those do come to the market, it could be a little bit of time from now. It could be another 12, 18 months before some of these projects get launched. Ultimately, we'll see if there's going to be lineups on these properties. Ultimately, this is literally the question. We saw it in the past when the builders would bring projects to the forefront, when the market was in a safe, sound place. A lot of buyers lining up overnight, sleeping in front of these builders' homes to try to get access to these houses. And now, ultimately, we're going to see exactly how this plays out moving forward. And the last and final thing I think of this whole conversation that a lot of people are missing is, as the happy times potentially, as some put it, are ahead, rates are falling, fixed rates are falling. The sentiment, the psychology in the market is huge. You cannot underestimate the psychology, the FOMO. This is literally what happens in a market. We've seen it happen time and time again. Not us. This is exactly how our phone rings. This is how we generate business. When the markets, everyone's buying, everyone's looking to buy. So when the markets are soft and no one's buying, obviously interest rates might be higher, but the market is quiet. All of a sudden, everyone starts to move into the market. It bottlenecks, and we start to get those multiple offers, those bidding wars, the no conditions, no home inspection. Obviously, these are the markets that could be facing us in the next few months. Ultimately, once December 15th kicks in, we'll see how this plays out. And once again, we're not telling people, hey, you better go out there and buy a home now, but be armed with the information that you can make a better decision on when you should be purchasing. Are you saving 20%? Are you buying with less than 20% down? Do you have co-signers and guarantors that can jump on board to get you into the market? And what do you think is going to happen with home prices over the next 3, 6, 12 months? Let us know what you think in the comment section below, but wanted to share this information as we're talking to our clients in real time. And these are the fears. They're having these fears about not being able to afford a home in the current market. Imagine now what happens in the future. Let me know your thoughts in the comment section below. But until next week, thanks again for stopping by. We'll see you next week.